All right, good evening, guys. This is the nightly strategy podcast during these volatile times. This is Ken at Tortoise Capital, March 9th, 2020. So just some administrative notes. If you're the dojo level of service and are interested in subscribing, I would encourage you to do so. If you're an annual member and then just doing the dojo support per our agreement, you're good to go. Don't worry about it. For non-subscribers, 1 April prices are rising as noted, so if you were ever thinking of upgrading to a level of service, this would be the time to do it. The lifetime discount program is also going up on 1 April, and I think it's a good deal long term. So I've got 3 of my co-teachers here at in the Department of Logistics and Resource Management that are I'm gonna bring on to help me with coaching. And I'm teaching them how to trade anyway. These guys are all Army retirees, combat veterans. They're all either with a PhD or in a PhD program, and are world-class strategic planners and teachers and facilitators in our grad school here. So I think they're going to help me, divide the workload up a little bit. I'm still going to do the coaching, but they're going to help me set it up and run it. They're going to work on their ICF certifications too, so International Coaching Federation. So looking forward to these guys helping me. Jessie, who is my business strategist, she's the only one in the family that I can't beat at strategy games. So she told me to add a la carte menu to what I was talking about is a library card annual educational access program. So we're going to do that. The team I just talked about, we're going to start turning the like the boot camp videos and then the 37 strategies document, and I'm going to update the how to read the report because I've added some new pages in the last couple of years. So I'm going to do all that as part of the June streaming workshop. I'm going to do it Raleigh, but I'll make that available to you guys, and those would be the first ones that I put into place. It looks like I'm going to use talentlms.com as the delivery mechanism, so we can kind of get out of the base camp delivery mode and just use that for collaboration. And then this is Talent LMS is a corporate educational service, so I'm hoping that will help us streamline. And my intention is to break up those great big programs into smaller bite-sized chunks. Okay. Other notes, there's something about March 9th that just sticks in my memory. If you go back and look at 2003, that was the bottom of the market. That was a washout pattern that day, and I remember what I wrote just as if it was yesterday. And we were talking about what could happen, and that was one of my first articulations of you got to listen to the charts and what they do and not the talking heads. It's what the chart tells you. Somebody asked me that over the weekend, who do I listen to, like financial analysts and whatnot. And honestly, for actual decision making, it's all charts. That's it, period. I would just point out that the blended monthly rebalancing and the ETF2, those stupid, dumb caveman rules, once again, positioned us on the side of safety well ahead of these major meltdowns. So there were 3 existential threats to the market in the last 20 years. One of them was the internet bubble breaking in 2003. One was the 2008 and 9 financial crisis. And now this one. And in each case, the dumb BMR and ETF2 proved their worth by getting us onto the right side of protection. And then if you just look at that symbol WIZ, this world-class artificial intelligence model, just got crushed. So caveman rules for perilous times. Keep it simple. Bob asked a very good question. Who has the counterparty risk for energy company hedges? Because they're hedged against falling energy prices. Who's taking the other side of their hedge? And how solid are those guys? So if you think the energy companies are okay because they're hedged, who's got the counterparty risk, and what happens if that collapses? How much for a barrel of Federal Reserve ink? We're about to find out as they're printing it as fast as they can talk. I call them nitwits. That's unfair. The system puts them in place. But which one of those 3 guys really Do you want to have with their hands on the steering wheel Bernie, Biden, or Trump? Take your pick. And I just wonder, is that the best we can do? There was a time when our nation produced giants. Andrew Jackson, Teddy Roosevelt, Franklin Roosevelt, Eisenhower, and that's what we have right now. And I just, what would FDR do at a time like this? He'd remind us about fear. And that's the only thing to fear is fear itself, so don't worry about it. That little link goes to a nice discussion of just what you can do practically, realistically, and affirmatively. Eat, sleep, walk, wash, and relax. And now the usual case studies will come up next. Gold for me is this anomaly. I think it's just guys selling cash or selling gold for cash. I don't know. And here's the one that got away. So I had an account where I had a large position in UVXY as a swing that I had bought at 20 and I sold on Friday at 29 and watched that thing open at like 50. Yep, that's the one that got away. So what do? You remember the context that the decision was made in. It was still the right call, because even the 20% position that I still had, which felt pretty good today, even that one was keeping me from sleeping pretty well. So that keeping 20% of that was all that I could stand anyway. And I have experienced in my life some moments like in my dad's IRA account, when I had him in a position that did not allow me to go to sleep, that when the market closed and I realized what I had done with his retirement account, which was, the estate, I vowed that would never happen again, and it never has. But I remember what that was like, staring into the abyss, and I told him about it, and he said, and this is my dad, he said, well, what are you going to do? You can't spend it all, so can't take it with you. Just learn from that and just keep going. He was and always will be much better than me. Miss him every day. So let's get on to the case studies. And let's just remember what actually matters. The people on your left and right. That's what actually matters. Okay, here we go. Let me find. Got a lot of cases to go through today. Excuse me. Oh, sorry. We've been through that one before. This was from last week. This was also Friday. Oh yeah, this was Friday. Last Friday. This one. I remember this one. Where is it? From here. Yeah, the final UDOW of the day, and cashed the intraday piece and kept a swing. What I needed to have done on that one was basically what I did, which was kept the 20% of that of the UVXY swing trade, and so that made me market neutral on this one. So get rid of the intraday trade there, and then have enough in hand for over the weekend. But even then, I was sweating small bullets on that one. So there was some interest in Alex's digitized learning journal. I checked in with him. I thought this was just a Access database, but what he's actually got is a proprietary integrated decision-making, decisioning, trading platform that he's got some programmers working on, and it looks pretty elaborate. I'm going to interview him to see how he thinks his way through that, and he thought maybe downstream he might do something, be able to port that to the public. It may be too complex for a lot of people, but it was useful to see how his brain is wired and how he looks at integrating in a systematic way. I think there's a really good software out there called Trading Journal Spreadsheets. Look up TJS, Trading Journal Spreadsheets. If you use the Tortoise code, I think they still offer a little discount on that. And they do a nice job of tracking the things you need, I think, to make it to make your trading journal. I'm more of a caveman than this, but I really respect the level of effort and integrity that he's got going in here. And you can see the way he's got it coded, he's going to be able to aggregate and extract themes and messages pretty well. So I think that's a pretty amazing piece of work. All right, into the case studies. So today, this was SCO. This is the triple leveraged short oil, the crude. So this is going up as oil crashes, right? So it had a big gap down, and then I bought the owl position. Oh, let me get my thing in there. Sorry. So I got the owl entry. You'll notice, and then I just cashed when it hit the VWAP, and then couldn't make any further headway. So I just cashed one. It then chopped around, and the market was crashing, but this was just sideways quiet. Here's that little Z3 pinch breakdown and then reversal. So I bought that in when it crossed back over the Bollinger Band mean, anticipating a breakout of the VWAP. And then this was one where the entire market was, getting smashed. This was already down like 20% when it gapped down, and so I get 3 positions in the usual way. In each case, after each consolidation, there was no selling pressure, and then buying the breakout once more. So here's the consolidation, and then got it here, and then just cashed it in the afternoon when I felt like I'd had enough. So that was that one. Let's see, next one. So this is UDOW. And what I was doing was trading UDOW and SDOW intraday in this particular account, not the futures, but this is triple leverage. And so what I've integrated is both of these UDOW and SDOW on the same chart. So on these ones where it looks like I'm going short UDOW, what I'm actually doing is going long SDOW, but it's the same trade because they're mirror images, right? So what I would note here is that I was trying to get on board with what I thought were going to be rallies and intraday plunge protection team. And so all of these UDOW longs were things like where we had, in this case, a gap down, sold off. It sold off during a gap down, crossed the VWAP, so I was long. It made a big run and then started collapsing, and all I could do was get out of there with basically a scratch. And then immediately it ran up. And I was gun shy, and then I tried. I got the short here. So this is really would have been SDOW long, but basically the RLXD, and that felt really good. And I took the owl. I was going to take the owl here anyway, so I took the RLXD exit, made bank, and then essentially stop and reverse, and then this one. Scratched again. Then I tried getting short and it scratched. Got short again. This one paid off. So that's the collapsing dragon. So this is like my favorite one of all time because you have a hump and a lower hump in the dragon and a hump and a lower hump in the RL10s, and then you get the collapsing dragon below the belly of this. Let me see if you can see that. So below the belly of that of the dragon, and you have a PSAR flip up here. So that's the short, and you'll notice that the Bollinger Band is rolled over, and we got a long distance back to the VWAP and then back to fair value, and that's where it all went. It came all the way down to fair value again. So this was a nice leg. It pulled back, bounced off the VWAP. Under other circumstances, I might have put a second position on, and then I would have scratched that anyway. So I wanted to get paid on this one. And then I tried going long because I thought this was the chance to break out. It didn't, so I took a micro loss. And then collapsing dragon here. And this is not only crossing the RL270, it's the pink line or the purple line, the RL270, but also this I've been fond of this idea of the Z3 excursions. So whatever the previous Z3 excursions were, I look at any price breakdown below there is sort of confirming that this is a heck of a move compared to that previous time period. So when I see this breakdown, this was the no-brainer trade And then I want you to notice what happens with the fair value, just gets crushed, and you can even see the VWAP declining. So you're getting a lot of volume in here. And then notice how much hitting the ask it was on the sell, right? So this was huge down volume, and just guys wanting to get short at any price. And so I just took the RLXD exit again, and then by that time it was getting into the close. And I was mindful of what had happened Friday with that 10% intraday move, and I didn't want to get caught on the wrong side of that. And all it really did was a couple more tactical plays, but I had already had my fill by that point. Next one up is this was VIX. So I was a volatility trader again today, but I just could not get on the right side of this. It should have been in SVXY here, and missed all of this because I was fiddling around with that oil and Dow, and it was just it was so volatile that my span of control I reduced to 2, and I just couldn't get this at all. And then once it settled down and then the VIX started working, I got a micro, but basically that's a scratch. And if I made anything here, I gave it back here. There's my double bottom. I was slow to get in. I waited for like that Z3 breakout. And then it ran up and then started hesitating and selling. And I got out just in time to miss the move. It came back, found support. I was slow to get in. On a better day, I might have been in here, but I didn't get in until it had the Z3 breakout and it getting really close to testing the VWAP, and it finally came through and gave me a micro. But I just felt like on a day when the VIX was there was a 20% move, I just couldn't get on the right side of that. So there it was. On the other hand, wheat and precious metals. So this is one that I just don't get because of the gold. I know there's some fundamental reason. I'm just too stupid to know it. But my primitive caveman mind says that why isn't gold and silver and precious metals being great here? So it was down like 5% for the day, but that's partly due to a huge sell-off. And so this nice little run is what, and then it collapses. It still ends up down 5% for the day, but intraday. So I tried this one long and scratched. I tried this one short, had a loss. I stopped in reverse when it finally got through the VWAP and then the RL270 at the same time, and took out the humps of these RL10s over here. So I just felt like, well, maybe this one, I'll try that. And that turned out to be the one that worked. And then consolidation, leg up, consolidation, got the second leg up, and then I just was happy to take that. I missed the short completely. I thought this was a resumption, finding support at the VWAP, and it never really panned out. And then I got out of that thing and then didn't have the guts to get short on this leg, but I was working UDOW at the time. So that was okay, but I'm still having a hard time understanding why that's the case. So this one is from Danny, the programmer, Danny Ben Yair, who's the programmer of the TC2000 bundle. And he's got a nice video on this one where he talks through his 5R trade intraday in TLT. So I just thought I would show the beautiful work that he does. He gets short here like on a hybrid frog, and it is rolling over into the fall. You'll notice that. Beautiful job here. He gets a fractional, stops and reverses, gets a fractional, stops and reverses on the collapse here, on the rejection of the summer. So he's short, a second short, and then cashes this one on like a 1, 2, 3, beautiful, and then stop and reverse, wonderful. If you don't get that one, you got to get this one right here. Let me shrink this down a little bit so you can see. You got to get this one on the PSAR flip and the owl, and then massive goodness. And now I want you to notice how he's keying in, now that we're later into the day, on the 2 dots of the PSAR flip. Says by that time, you know what, you got to be in it. And then he gets the RLXD exit, and then stop and reverse, and then that basically scratches. And then the PSAR flip again, the two dots, it works, and then the second collapsing dragon works, and then a big win back to the long term. So 200 period average. So just really well done. His narration of that is in the he's put together a case study file where he's showing the way he's using that bundle in the management of his accounts and his hedge fund. And you can you don't have to own the bundle to see that, but obviously we're encouraging people to think about it. But you can see the case studies that he's got in there. He's doing a nice job talking through it. There's still a $1,000 coupon available. If you're in the sound of my voice in March, use the code word or coupon Centennial to celebrate the 100th person who has joined us on Patreon. And then I also we put together a Dropbox folder, and I believe I made that available. The link to that available on Patreon, so you can see the videos there. So Eric Morrison, who's one of those, he's a rocket science PhD that teaches with me here at the college, and he's a great logistician and has done a strategic planning for an energy company when he took a break in service from teaching here at the college, went out and made some money, and then missed the soldiers and what we teach so much he came back. But he's knocking it out of the park with Forex. He's been a Forex trader for years, and just recently came to one of the boot camps and got convinced of the goodness of the frameworks that we're using and got the bundle. And now he's doing TC2000, and he's up about 40 grand in his in that portfolio account that he's managing. And he's been recording the some case studies as he's learning to do Camtasia and do the speed runs. And he did a really nice speed run this weekend on 21 currency pairs, which if you're a Forex person, you might be very interested in that. So he's putting those TC2000 bundle case studies in Dropbox as well. And it's a combination. You can see the TC2000, but you can also just hear guys, applying the principles in the way that we use them. So they're good case studies for learning just in that sense as well. Let's see, next one up is where we at? Okay, right here. Okay, so this is Alcoa. As you know, that's one of my usual suspects, one of my favorites, and the XLB is the material sector that it correlates really strongly with. And my estimate is that along with transports and energy, the basic materials is going to be an area where that global slowdown of the supply chain is really going to crush. So what I did on this one was I waited my usual 30 minutes, and I saw that the peak of the RL10, let me see if I can move this out of the way. So where that RL10 peaked, I just put that line right there and say that was the upper limit. And then where the RL10 peaked down here, I said that was the lower limit. And then I just drew that across and played the breakout here. So I treat that like a minimum manageable risk box, or a modified frog box, if you will. And that's about 25 cents, and that's about my normal thing in Alcoa. So when it broke out, think of that as a, like a hybrid frog opening 30-minute. It's almost like a relaxed quick frog. So bought that one, cash. It was a Z3 excursion that collapsed. So I liked that one, and I wanted to get paid early. And then I didn't stop and reverse. I just didn't have the guts for it, and it was a span of control issue too. But when it got down to the VWAP and then started to collapse again, I went ahead and got short and basically scratched at the VWAP about 20 minutes later. Tried the long because I felt at that time the market was showing some signs, and that one just quickly collapsed, so loss on that one. It then gave me a Z3 pinch. This is not a super pinch because you can see the RL270s way down here, but everything else is inside that tight pinch. And then it broke down, so I bought the Z3 breakout of this yellow zone. When it collapsed through the yellow zone and made a new low of the day, essentially that's I think of that as a collapsing dragon. And so that's the second position. It consolidated into this little Z3. The whole market was suffering, and I bought the third position with the collapsing dragon. And then just on a money management basis here, I said, why not, when it broke down below the previous RL90, and it broke down here, and it's just like, well, why not? And then that's why not. And it was just too large and getting close to the end of the day. So I felt like I was, getting greedy. So I just cashed the whole thing there. Next one is, sorry. So this is Caterpillar. So this is a company like Alcoa that is also going to suffer, right? So because they have a global industrial equipment business, and if that whole thing is slowing down, then their earnings are going to suffer. So this was a chance to play the double top in the RL10 and the dragon rolling over. This felt like almost like an owl collapsing dragon, and then when it crossed the VWAP just short with a Z2 stop up here. Take the owl exit. Tried the owl, nothing. Then the owl exit, and now this is like a high, a lower high. Think of that as a pocket entry, and then the collapsing dragon would be here. I didn't put a second position on because I had span of control issues. But then when this one collapsed some more, second position, a why not third position, and then just cash it, and that felt like enough. That was a huge move. So this is like collapsing from 110 down to 105. So that's basically 4.5%. This was the news of the day. I mean, as if we don't already know, but this when I got to this one, I said I didn't realize that was the move in Alcoa. When you add the gap down, it got smashed. And then oddly, silver, Boeing, American Express. So it didn't matter as long as you got the side of the market correct. As we've been saying, get the market call correct, right? So this was just some more, the news at the end of the day. Kyle Bass is always worth listening to. He basically says, just wait a month before you start thinking about buying value. Just wait a month. Kyle Bass, pretty smart guy. Kamer smashing Trump on this one. Stop playing golf. Stop fiddling. How about showing some leadership? I don't disagree. Not a lot of liquidity. Dow down 2,000 points. And this one is like, I recorded one of these sessions over the weekend for my doc students who were trying to learn how to do, scholarly approach to strategy making. And I went through that weekend's version of this, and this wasn't much different. They talked to 8 different people with opinions about, can you buy, can you not buy? Every one of them had a different answer. Every one of them had a different set of implied assumptions that they didn't talk about and what they're. So I talked about that this weekend. So that's why I don't listen to anybody. I just look at the charts. So what I want to say on this one finally. So this one is kind of a step back a little bit. This is like the ecosystem. So on the left-hand side are all of the educational pieces that I'm building out. On the right-hand side, this is all the operations. I think of this as like doing the business and the current operations, like working. So Campfire, these Patreon commentaries and stuff like that. All these other things that were in the blue were really teaching guys how to do these things directly. But I realized that all of this stuff, like the Dropbox videos, the Basecamp videos, all the live trading and research weekend archives, all of this stuff, like the 40 RLCO quizzes, the ebooks, the 37 strategies, glossaries, all of this stuff needs to move over and is going to be part of the support work that I will do in courses that are designed just to lay those foundations. And I'll make those available to you guys, the legacy guys. And basically to everybody that signs up by 1 April, you'll get all that stuff without having to pay the prices on it. And then the coaching, I'm going to invigorate that. The personal coaching that I'm going to do is going to be driven by the International Coaching Federation body of knowledge, which I believe I want to do so that I round out my academic and scholarly approach so I don't have any blind spots based on, the way I coach now is based on my experience of 40 years in martial arts and athletics and developing soldiers and what I've learned by talking with you guys as we go. But I want to just complete the pattern by getting the ICF certification, make sure I don't have any blind spots on the professional side. The guys that I'm mentoring here at the school are going to help me with the small groups, and guys like Worth and Kim and Kieran have all been helpful facilitators in this area too. And so I'll always be involved in that, but I want to, guys want to do individual coach. I haven't wanted to do that because I have not been satisfied with the way that goes, and so I believe by adding ICF I'll be able to clean that up. So meanwhile, all of these things that are on the courses I'm going to be rolling out through Talent LMS. All right, let's get to the speed run real quick. This one goes pretty quick because you might have recognized that the market was down big today. So come on, Kenneth, get that over there. There we go. So Alcoa, I don't have a swing position on it. I was trading this big sell-off. Let me zoom in a little bit. That whole sell-off, that was the intraday trade, and I didn't keep anything because I'm just worried about overnight exposure. So I kept the some SDOW and UVXY. Apple, I don't have a position, and again, I'm worried about that's the thing that buying pressure is going to hit. But it suffered like the whole rest of the market did. Aussie dollar, Eric had some really nice commentary on how he was trading this one over the weekend. Beautifully done. I don't have a position. I'm not a Forex guy. I'm just learning to dabble. Boeing, I'm just watching this. This is part of that whole Dow sell-off, but I should have had a short in here. I had 2 scoops and covered, and where I should have been on a bet, if I'm a better man, this is about where I should have been in when it broke out of that previous trade frame range. And then right here is when I should have got it. If I'd gotten there, I probably would have scratched it anyway. And then today it was just I had span of control issues. I was looking for the indexes. So Caterpillar, you saw the intraday trade on this one. I had considered getting short here at the yellow line before when this thing rolled over. I should have been short at 125, and it's down at 100. So that's another one that gets away. I'm looking at CEF as an alternative to Wheaton Precious Metals. It didn't suffer as much as Wheaton today. That's a Canadian physical gold and silver trust, well managed. Cliff, this, like the whole material sector, I should have gotten short here. I didn't. Just missed it. Cut, this was a, sorry, you can't see the red dot in here. This was a, yeah. This is one I should have gotten short here. I decided to hold that because I liked the way it recovered and then got smashed here. I said, okay, learn my lesson. Thinking too hard, betting on rebounds, and got smashed. Diamonds, I'm only trading intraday. Devon Energy, I just watched this one. I've got the exposure on triple leveraged USO. I didn't want the additional company, but this is one that in retrospect I might have wanted that one. I looked at this on Friday as could this have been one where I was short in here when it broke down and closed weekly? That's one that got away also, and then it was too late for me to get it on here, and I had span of control. Emerging markets got smashed. EFA got smashed. I have no positions in them. Japan got smashed, but actually had a little bit of a rebound here. I just stay away from that one. Talk about another one again. I'm just showing you all the ones that got away. The swing in Mexico, but Mexico actually did pretty well inside here on the recovery, but I'm getting that intraday with hybrid frogs. Same with Brazil. I should have had some swing in both of those, but I'm getting that expressed through UVXY just for the market itself, and that's just the way I'm playing it, and UDOW and SDOW. So I'm trying to narrow my span of control to just the central tendencies. Home Depot's one where I got long in here and had to cover that one today. Just got smashed. Russell, I had been long. At least I covered that one. That's one, if you're a Russell trader, you're certainly piling on. Look how poorly that closed. That's one that if you're an index trader, that's a good one for you. I'm pretty grateful I cashed the win in real estate last week. This is one where even the defensive play closed poorly, so nothing is safe. McDonald's, I had framed this as a trade, and I didn't have the guts to pull the trigger on it last Thursday. Friday made me think that it might get long, and then by today it was just it was overcome by events. We call that OBE, overcome by events. I got smashed on this one. Why didn't that show the exit? I thought I'd put that in there. Anyway, I took the 2R loss on this one. I had gotten long. I wanted to hold it one more day, and then at the open, I just got out of it. So 2R position. SCO. Now, this is one where I did get it on Friday at 21 and some change, and it's up at 36. That's the triple leveraged energy. And so this is one where we're going to have to raise that stop up into here. And I'll be trading that one very, very closely. So let's see. I got my fingers crossed on that one. I took the hit on SPCE. That was the one, the Virgin Galactic, and I kept talking myself into holding it. And said I was going to honor my stop. Yeah, I honored it and then got smashed here. And then it closed strongly, so I don't care. Simon Property Group. This is one that I had wanted to get in around here, talk myself out of it because of the fear of the rebounds, and it closed so poorly that this is one that I think you could make an argument that commercial property is going to be suffering. Treasuries. This is one where, God dang it, I took that exit in here today on the swing because it started suffering and just didn't like it. I didn't want to. I had my stop for the swing way down here, and then as it sold off, and then as it was rushing down, I was rushing up, and I met it halfway up in here. Tesla, for the true believers, I had thought about getting short in here when it collapsed last week. Didn't pull the trigger, and now it's well down here at 600. Off a high of 900, so it's 950, excuse me. So it's over 33% sell-off. And welcome to the world, Elon. UDOW, I'm trading intraday. Natural gas had a huge day up. I don't know. Oil closed, got smashed and closed weekly, and so I've got the play on this one in that triple leveraged SCO. UVXY, this is the one that got away. This is where I sold it on Friday. And then watch this one just get away from me. VIX had the same thing. Wiz, hey, that just got smashed. Now, maybe they've rebalanced this thing and got the defensive plays on, but that's what the best practices in the world of AI got you was a 35% sell-off. So artificial intelligence for the loss. Now, Walmart, figure this. I kept my position on this one. So this was a Z3 excursion buy on a big strong name everybody got to own, so I'm still in it from 108.79, and against all odds it's at 117 and holding. So I mean, caveman. Okay. Wheaton Precious, I took the scratch here today. Now I put all these in. I wonder why that didn't save the drawings. All right, so Wheaton Precious Metals took the scratch. That's one I just can't understand. I had got. Now, why isn't that? I took the swing short on this one. I had thought about this one before last week, but I wanted my short exposure to be in the broad indexes and not win. If I'd have thought more carefully, I would have gotten that one. But I finally took it today. I mean, I missed it Friday and then just took it today as a hoot. I took the loss in. So I've been talking myself into U.S. Steel, believing that the coronavirus is going to return manufacturing to America. Yeah, I'm only about 5 years too early on that one, so I took the 1 hour loss. I was long at 8 and sold it at 6. I just couldn't take it anymore. But you know, that was the 1 hour swing loss, and so there it is. Materials, I'm getting this intraday with Caterpillar and Alcoa. I kept the Caterpillar swing short, and I'll pile back on intraday. So energy got smashed. I'm playing that one with SCO. XLE is interesting because you not only get the oil crude, but you're also going to get a slowdown in earnings from the big companies, so that might even be a better play. It doesn't really matter at the end of the day. It was down 20%, and SCO was up 51%. That's the triple leverage in play there, 2.5 times. So, take your pick. Financials got smashed. Screw those guys. But if anybody's going to benefit from the Fed ink, it's them. XLK, XLK this is where it crossed the zero line, and I was a believer on this one, and I got bottomed out on this one, so I had held it. This one held my stop, and that was my 1 hour, so I took a 2 hour on that one, and then at the gap down, I just couldn't take it anymore. I think this is Healthcare XLV, and yeah, so all of the possible gains there just got smashed. I don't have a position in it, but that had been the strongest of the XL series, the business sectors, and that got slaughtered today. So just a quick look then at the dailies, if I can find that. Where do I have the dailies at? There it is. Okay, so now quick look at the daily. So what I've got marked off here, let me see if I can get a, yeah. So I added a 30% sell-off marker over here. You can see we're at a Z3 excursion. We're in the winter, so we got to, and this is at minus 20 on the MACD histogram. So we had the 10%, 20%, and now the 30% sell-off is down here. Right now, our price is right. Oops, sorry. Our price is right here. And Monday's opening, and then it closed poorly, so it had that big run up and then run down. And we're right on the boundary of that 20% sell-off. So everything sucks. All the usual suspects. All these big reds are the big breakdowns. So you see energy and the Dow got smashed. Treasuries had the only positive juice today. No pinches, obviously. And notice that Treasuries are 4.5 sigma above its Bollinger Band mean. And then look at energy at 7 sigma below its Bollinger Band mean. Brazil, 6.5. Whoops, 6.5. Yeah, these are the auto framers for the swing trades, but don't do that. The deep discounts, again, those are someday when we get the swings, these will be all back in the money, but I don't disagree with Kyle Bass, who said that's a month away. Everything in the winter, you can see everything in the winter here, except for treasuries, and then you can notice over here all of the daily winters and just a handful of monthly spring, and a couple falls for gold, and then Virgin Galactic and wheat and precious metals. Daily summers are all the defensive plays, so you get your volatility, treasuries, and that triple inverse energy. Multi-time frame, NDX, everything suffering, only the treasury. And Walmart. Everything except Walmart. And Walmart is that's America, I guess. When the going gets tough, the tough go to Walmart. You can see the breakdown in the in all the sigma stats here. Let me get my little. So here's 1 sigma, 2, 3, 4. The percent stretch, the stretch relative to the 200 is also 4 sigma. Notice, the slope stat is 4 sigma down. This is now the slope stat of the last 30 compared to the last 10 years. Please notice, worst ever. That's how fast this pardon my language, that's how fast this thing can fail. I want you to notice some important things. A high, a lower high, a third lower high, and when it crosses over its 10-period moving average, that's the signal for a change in condition. Notice the breakouts on the S&P volatility piece. So I look at this little region in here between the red and the green lines at plus or minus 1 SD. That's like the volatility river of ATR divided by price. So when you get this breakout, that's the indicator, and that coincided with this when you use the standard deviation of price and this one is ATR divided by price. By any measure, this was the marker. Slope stat had been as bad as 9 sigma, and it's rolled over and getting worse. This has completely shattered. That's, climb up the stairs, jump out the window. The Z-score today on a 40-day holding was minus 4 sigma. The 1-day move was a minus 8 sigma. The 5-day move is a 6 sigma, 3 sigma, and 5.5 sigma. So that's how you read this thing, where we are, and this is just the market's volatility. Look at the size of the real bodies versus the size of the wicks. And then all usual suspects. And the holding days and everything else just doesn't matter. Okay. Gold and treasuries, the only thing holding up. Everything else getting murdered. Okay. Size of the gap stats. That's everything I want to cover. Thanks for hanging in there. Been 45 good minutes. I really appreciate your patience and your effort and your commitment to getting it right in your own head and heart and soul, and taking responsibility for what you're doing. All I can do is set the table, and I'm thinking about you guys, and wishing you all the best. Eat well, sleep well, relax, meditate, clear your mind, remember what's important, focus on that stuff, get the right things right, and we'll get through all this. Hang in there, and take good care of yourself and those around you. Be a little gentler with people. Take good care. See you in the chat room.